Wait, I'm now seeing if it's a bit responsive now. It's not extremely fast with response with respect to the response, but you just have to deal with it, right? You deal with it that way. So now, yeah, we have in mind the confirmations. We know how to identify them. Let's consider what fundamental analysis is. Right. So all we've been doing from the trend line, Fibonacci, whatever it is, up to this point, has everything to do with technical analysis. Right. It has everything to do with technical analysis. But now you must understand that we live in the global economy, and then it's not just we drawing the lines, trend lines, and stuff that affect these currency movements. It's real world economic data that affects these currency data or currency movement, right? Including interest rates, unemployment rate, gross domestic product, consumer price index, or the manufacturing index, services index, a whole lot of them, right? That you may probably never finish learning about if you decide to start your journey into them, right? So if you want to consider fundamentals, based on all the lots that I've mentioned, I only take particular interest in four, right? Which is fundamental analysis, right? So what are the four? Number one, I want to take interest in what interest rates, interest rate. Some people will call it cash rate or official cash rate or bank rate or whatever they want to call it. So bank rate, right? So you may see interest rate, cash rate, or bank rate, they are the same thing, right? And then I want to take also interest in GDP, which stands for gross domestic product. And I also want to take interest in unemployment. Then finally, I want to take interest in CPI, which also stands for inflation rate, right? So the CPI also stands for consumer price index, right? Consumer price index. So you may want to ask, why am I so particular about these four? These are the major fundamental data that can move the market, right? They can move the market in the sense that you can see what's huge spikes coming in, whether on the daily, on the 4 hour, or on whatever time frame, right? And then this information could be the reason accounting for those huge spikes, right? So as a swing trader, how do I factor in these in my everyday trading analysis, right? So as a trader, before a week begins, you have to always look out for what is impending in terms of what fundamental. And the best way to do that is I use the Forex Factory website. You can see today is what Sunday. The market is obviously going to start trading from Sunday. There isn't any fundamental data on Sunday. That's why this box here is empty, right? That's why this range here is empty because there isn't any fundamental. Today is Sunday. But when we click on the next day, then we have which is Monday, we have some economic data. If you check this economic data, you see here we have some in red folder and some in brown folder, right? So when you come here, right, you come to this aspect of the Forex Factory website. This is where I use to filter my economic data, right? When I click on the filter, I don't want the yellow folder news because they are not volatile enough or so much important. I don't want the ash folder. I only I'm interested in the brown and then the red, and then I want what all types of events, whether growth, whether inflation, blah 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 blah, and from all currency pairs, right? And once you apply filter, then you will have it, right? All types of events and all currency pairs, but the red folder and the brown folder will filter them for you, because not all of these things you're seeing here deserves to be a red folder event, right? So the red folder basically means what? High impact. So if you see anything that has to do with red folder, it means that that news is high impact. It has possibility of what? Moving the market or bringing some volatility in the market, right? So you can see here, Tuesday we have what? Aussie dollar cash rate, which is the same as interest rate. Then we have New Zealand unemployment rate, right? So that is coming in on Tuesday. Very huge economic data, both for Aussie dollar and then New Zealand dollar, right? So next week, particularly, we have what? A lot of fundamentals coming in. Then Wednesday we have what? USD, ISM service PMI, which is service producer manufacturing index, right? So it's also quite relatively a volatile event, but not as volatile as the four I listed. That's why it is not really like a prioritized information, but it's just good to take note of it. And then the time, not only good to take note of it, take note of the time of release as well. And then Thursday, we have what? Another set of what? Huge information is coming in. Bank of England official bank rate, right? Will be announcing their interest rate as well. And then this one stuff for FOMC rate statement and FOMC conference, right? All important information to be aware of in the market, right? If you want to read about them, maybe you're confused, you're wondering what's the meaning of all this, right? Once you click these details here, right, it's going to explain exactly what this economic events mean, right? So reports include economic forecast for EU members, blah blah blah. It teaches you, so you take the time to do that. I don't have the time to do that at the moment, right? So if you want to learn more about all these economic data, this is your folder for that. And then on Friday, we also have what? Another huge information, which is what? Canadian unemployment rate. So you can remember that Tuesday we have what? Aussie dollar interest rate, and then New Zealand dollar unemployment rate, and then Friday we have Canadian dollar unemployment rate, right? So once you trade in the market, and then you're particularly looking at what? Aussie dollar, New Zealand dollar, whether it's on the Monday, you should be aware that what? Tuesday we have what? Very huge information coming in, which could affect the market in any direction at all. So here, as a trader, you want to ask yourself if you can be able to find a confluence that allows you to jump in a trade early before that fundamental event would come out, or you should totally avoid jumping in the trade and waiting for that fundamental event to affect the market before you want to take a decision to jump in for a buy or sell, right? So let me show you guys a clear scenario of something that happened some years back when I was also anticipating a major fundamental like this, right? So this is Aussie dollar card, and then this setup was somewhere 2019 anyway, right? It wasn't even in 2020, it was in 2019. I hope I'm able to find that setup as quickly as possible. I think I showed you guys that setup yesterday. So basically, as we're waiting, let's see what happens. So with respect to that confluence, we had what? Market wave up, a second wave up, and then we have what? That trend line confluence, 0.1, 0.2, 0.3. It taps Fibonacci respected, and then I found what? My entry for a long. When I found my entry, I was aware that what it was Aussie dollar card. I was aware that in the coming days, there's going to what there's going to be, was it interest rate or something like that? The internet is messing up. Internet is really, really, really messing up. Okay. Let me just continue with this. So what I was saying, right, the setup was something like this. And then I knew that, so let's say this setup was ready like Monday, right, for a long, but I knew that Wednesday there was going to be a news on Canadian dollar, right? So Monday, all the confluence was set. I quickly got into the move. The trade ran up in my favor indeed a bit. I was able to protect my trade, which is putting stop loss to break even. And then on Wednesday, when that fundamental came, there were two things that could happen. Either the market could reverse totally, hit my stop loss at break even, and then I lose whatever money I had made, right? Or the trade could actually, fundamental could actually catapult that move explosively on the upside. And then guess what happened? Indeed, it catapulted that move explosively on the upside. Right. So it is me being able to forecast those fundamental events and getting in on the market way ahead of time before the rest of the world even realize. And then I'm already in the move. Right. I've done that several times. So let's say, like all things being equal, we are expecting Aussie dollar interest rate, right? So what we could do is, if the interest rate is less than 1, we could find an entry for a short here. Entry for a short here. Let's say it start putting us already in what, in profit. We trail our stops, our break even. This trade comes to somewhere here. Fundamental event comes. It is not maybe a great news for Canadian dollar that much, because if it's a great news, it will push this on the upside. But if it's a bad news, then it's going to keep pushing this further down. But once it pushes down, then we already still accumulating some more profits in our distance. So you always want to have a very open mind about fundamental events and predominantly how they affect the market. And then if you want to use that as a confluence to get in the trade right before even the right move sets in, because as per fundamentals, what matters in the market is that any information that's going to be coming out on any fundamental event, that is where if it's a highly volatile news, that is where liquidity will predominantly set in, right? So money will start flowing into Aussie dollar, money will start flowing into New Zealand dollar, Canadian dollar. In fact, pretty much all the major currency pairs, because this week, like I said, is a very important fundamental week in the market. So we could expect to see huge volatility or volume of movement or momentum in the market, right? So fundamental pretty much just gives us an idea of where hot money would be, right? So just have that in mind as well once you're always trading, right? So now that we've talked about fundamental, technical, and then all the major things that we need to. We want to also look and consider why I've arranged my currency pairs the way I've done here, right? You clearly see that I have what GBP, JPY, GBP USD, GBP CAD, GBP Swiss franc. These are four currency pairs. Then I have what Euro GBP, right, making it five. So what is the implication for me arranging this? These are highly correlative pairs. So if this is strong, I expect this to be going up, this to be going up, this to be going up as well. But when it comes to Euro GBP, then whatever these four are doing, I expect it to be doing what opposite to that because it is what inversely related to each one of them, right? So pound Japanese and pound card, pound dollar, pound Swiss franc, they're highly positively correlated, but as compared to Euro pound, then highly inversely correlated. That's why I have put them together here. Now, if you watch what Nasdaq, US 30, right, they are also what very highly correlated because they are both what stock market index for the United States. So usually when Nasdaq is dropping, US 30 is also dropping. When Nasdaq is going up, US 30 is also going up. So all the time I want to compare them. That's why I have them close together like that. Then we have what the XY, oil, gold. These three, right? Specifically the DXY, it tells me the dollar index, which also signifies the strength or weakness in the dollar. I think I touched on that in the beginning. So the dollar index chart is just regular like these ones here, right? But once you anticipate what a downtrend in the dollar index, it means that you should also anticipate a weakness in the dollar. And then when you anticipate an uptrend in the dollar index, then you should also anticipate what a strength in the dollar, right? So I have the dollar index there, the oil, and then gold just as currency pairs that I take sneak peek at because what they are a little bit off from the regular currency pairs. And then subsequently I have what the euro pairs, right? Euro, Aussie dollar, Euro, New Zealand dollar. They are also twin pairs, highly correlated. So anytime I'm shorting Euro AUD, then I should also be looking at shorting Euro New Zealand. If I'm going long on Euro AUD, most likely we go long on Euro New Zealand. So that's why I peg them two here like that. And then we have a Euro card, Euro USD, Euro Japanese yen, right? These are also somewhat correlated, but not extremely highly correlated. But here, then we have another strong correlation here. Aussie dollar, USD, Aussie dollar, Japanese yen, Aussie dollar card. So you can see that what Aussie is what the base currency here, and then we have the other ones acting as code currencies. And then subsequently we have what New Zealand Japanese yen, New Zealand card, New Zealand USD, also what New Zealand as base currency. So if I want to see strength in all New Zealand pairs, then all I have to do is click here, 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 and then see if all of them are moving in the same direction or in the opposite direction. Here we come to Aussie dollar, Aussie dollar USD, Aussie dollar Japanese yen, Aussie dollar card. The same scenario is applies here, right? Once I want to identify if all Aussie dollar is extremely strong in the market, I'll have to do that. Flip to here, 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 and then assess how strong they are all moving, and then to be able to tell or forecast that they are their strength in the Aussie dollar strength or weakness or whatever it is. And subsequently, I have what the US dollar too. So it pretty much makes what me looking at my chart extremely what easy if you consider this, right? Extremely easy, right? I have USD, Swiss franc, USD, Japanese yen, USD card. Then I quite recently added these two though, right? But I'm still monitoring them. But if you watch them clearly, you can see how I break down my chart, and it's just very easy to follow and then easy to make sense, right? So if I anticipate also a strength in the dollar, and I'll also be interested in what all currency pair that has dollar as a quote or base, right? So I'll be looking at GBP USD, and I'll be looking at Euro USD, and I'll be looking at AUD USD, and I'll be looking at New Zealand USD, and I'll also be looking at USD Swiss franc, USD card, USD. You get it. So basically, once I anticipate a strength for the dollar, then I have to look at all dollar crosses. 1, 2, 3, 4, pretty much 5, 6, and 7, whatever it is, right? So once I'm expecting USD strong, then I should expect all these ones to also act strong or start pushing in that um, in that manner that signifies strength in the dollar, right? And then if I expect pound strength or weakness, then obviously where I have to keep my eyes on exactly at the very top of the chart here, which is these ones here, and then see how inversely it relates to this one here, right? Yeah, pretty much that is it with how why I've arranged my pair this way and how it helps me to quickly scan through charts and then take 3 or 4 entries at a go based on the fact that once I see overall strength in Aussie dollar or Aussie dollar, right, Australian dollar, I may want to go long on Aussie dollar, USD, go long on Aussie dollar, Japanese yen, go long on Aussie dollar card. Then I would want to go short on Euro, Aussie dollar because in here it is acting as what a quote currency rather than a base currency. So I'll go long here, long here, long here, but here then I'll short because it's a quote currency here, right? Then I'll look for any other Aussie dollar. Clearly, you can see that we don't have any other major Aussie dollar here. So, if we're looking for strength in the New Zealand dollar, then what we have to do, we have to look for also long, see what NZD card, NZD JPY, NZD USD. Then we want to look for the same trade in Euro New Zealand dollar. So, what this is when New Zealand is acting as what that point of inflection or point of decision making, right? Based on what cross referencing. So if you want to know that, so sometimes the most beautiful thing about the chart is that the setups align, right? You may open Aussie dollar USD, you see that it's maybe sitting on the 10 touch of the trend line. You may open Aussie dollar Japanese, and you could see that it is doing maybe a double top for a potential short down, and then you could see Aussie dollar, Aussie dollar, Canadian dollar, maybe doing what a perfect Fibonacci retracement. So from that, then you should be smart enough to see that there's so much confluence speaking in any one of them, and then indeed when the candlestick patterns also present themselves extremely clear to you, then you know the kind of action to take. What's he saying if it's stable? Oh, you're talking about the internet. Yeah, so that should pretty much give you a very strong basis in terms of what how to arrange your currency pairs. And mind you, these are the only currency pairs that I trade though, and then these are the only ones that I watch right every day in and out. I'm not interested in watching any other ones apart from this. I've been watching this for so many years, and then these are the only ones I've made my mind to be watching. So as a trader, as a beginner, even I do not even recommend you watching or stacking up so many amount of pairs, right? Take relatively between 5 to 10 currency pairs. Master them based on what I've taught you, and then add onto them gradually, right? You don't want to just stack so many currency pairs and then you get confused because you don't have what that mental capacity to be switching and then analyzing. Man, now I'm so used to the chart that the moment I open it, I know exactly what I'm looking for. But as a beginner, it may be a little bit daunting on you because you're not extremely used to the chart yet, right? So you don't want to load your chart with so many currency pairs. Select, like I said, 5, 10, work with them, and then gradually you can increase the, the the number of watch lists, right? And gradually you can increase the number of watch lists. So yeah, finally back to what somebody was asking with respect to how the candlestick reacts with a period separators, right? So yeah, just like this trade, right? So with respect to a period separators, you want to see how, let's say here, was our setup, right? We're looking at what equal lows here for a long from this range, right? Let's say that was the setup low. Equal lows from here for a long, and then we're still also looking for equal lows from here for a long, right? Let's see how we can translate that into the chart. That is euro New Zealand dollar, right? So if you watch here, and you can clearly see what those equal lows here. So if you're watching those equal lows here, right, obviously it's going to be what midpoint of the week. The week started from here, Monday, Tuesday, Wednesday, there about we start seeing what rejection from here. Remember the black one at the bearish candle, the white one at the bullish candle. We can see what sort of what inverse hammer, doji, inverse hammer, and we see what a hammer, and then sort of what another hammer again, right? Strong closures from here. So even if you wasted enough time for more confirmations, eventually you got presented something to act on, which is what even this hammer here, right? So you take your long from here, your stop loss beneath the range. What do? Even if you held the trade for just the subsequent candlestick hours, then you would have obviously made without any drawdown about 120 pips, right? But if you had all the patience to watch it run through all the retracement for the next week and then run up, then obviously you did yourself a good score of holding on to about almost a 400 pips, right? Quite similarly, if your setup, just like we're looking here, was here acting as that confluence for you to take the short long low, which is here, which is that market structure of double bottom, and obviously the same thing you're going to be seeing here as well, right? And then obviously you can see that what it would have probably run into what Friday, and then next week, which is a Monday, market opens, you have your confirmation already. So early Monday hours, you take your long, the stop loss beneath the range, and then what happens? The market doesn't look back. You make what, about 300 pips right from what the word go, right from the word go. The market gives you the opportunity without looking back to make what, 300 pips. So yeah, that is the confluence I take in terms of what drawing that doing my analysis, and then looking at how it also works on the chart, right? If we take one or two more scenarios on this, let's see which one. Let's look at something. Let's look at something that I quite recently had to trade on. We're talking about something like this, right? Even here, acting as that third touch, right? Aussie dollar USD. Let's see how it would have looked like on the chart. So this is Aussie dollar USD. So coming into the third touch, right? You can see it from all the way from here. You don't need to even draw these things, but if you want to, you can do that, right? So 1, 2, 3, and then what can you see in this range here? A push up, push down. You can clearly see what that tweezers here, and then the hanging man, and then the doji. Obviously, take your short here, the stop loss above the range. If you decide to hold this position for the rest of the week, then what happens? You bank about 155 pips, right? Somebody says I said something about the wicks. Yeah, basically I said wick represents rejections, right? So it was just an insight into how you should look at the wicks, right? So wicks on the upside, then you should predominantly look at the market trading downwards, and then wicks on the downside, then you should predominantly look at the market trading upwards, right? So if you see here, wick on the upside, it was a down move, wick on the upside, it was a down move, right? And so on and so forth, right? Wicks on the upside, wicks on the upside, right? And if you start seeing wicks on the downside, so they are just signs, they are just eye on the market, right? They just give you a little bit of critical eye, right? Or yeah, something to just act on, right? Something to just inform you, informative, right? So if you see here, right, risks on the upside, you start looking for short risks on the downside, start looking for up, and then here it was just ranging, consolidated. Eventually, we had a huge wick here. Then you should know that what indeed with this wick here, the market isn't done yet, and then it could potentially just push down. So if I see a wick on the upside like that, whatever position I'm in, then I want to be a bit skeptical and then see how I'll react. So it's just sort of a basis to guide your decision making on the market, right? When it comes to the wicks, right? Look at this one here. So you can backtest that and then you see, and you can clearly see what we pushed down after that. Here, we pushed what up after that, right? Here we push what down after that. Yeah, so then you can see what kind of formation is this. This is the evening star formation. Right after that evening star, I push down here what sort of what a shooting star, and then a bearish engulfing or hanging man, whatever you want to call it, then a push down. Do you have a specific time you look at your running trade? Randomly. I don't have any specific time. I'm not going to lie about that. But I look at them from time intervals, because if I take the trade on the 4 hour, obviously I need what next 4 hour session to indeed inform me how the trade is doing, right? And then subsequently the next four. So basically, you could watch your running trade in 4 hour intervals, right? In 4 hour or minimum 2 hour intervals, right? Look at another clean setup here, which is the evening star formation, right from there, what a huge drop. So here it gives you even the eye to start identifying the candlestick formations. Here we also have what that's sort of what evening star formation again. And then push down here we have what inverse hammer, doji, bearish engulfing, and then what a push what up, right? So if you do your hard work on backtesting or the candlestick patterns and formation that I've taught you, you start seeing some light, right? So 1, 2, 3 evening star formation again here. It gives me indication we could start reversing in this range, and then subsequently we have what the same evening star formation, and then from there what do? We start dropping, right? Very difficult to hold this kind of trade, but indeed we still what they drop. Necessary retracement, right? Remember I told you characteristics of a retracement, right? All the characteristics. A huge move up, the retracement takes time to push down, up, and then after that retracement, what happens? The market resumes the trend with huge move, right? So yeah, that's also characteristics that you should also have an eye on. And then there's a trade that I was telling you with respect to what 21.2.3 in the market. 1, 2, 3. This was a breakout candle right here. The market failed to trade above it, beneath it. Sort of a bearish engulfing. So if you waited for this bearish engulfing, this bullish engulfing, obviously, yeah, you would have had a huge late entry, right? Because now you have to take your entry here, even though indeed the trade did move through, but if you had filled your stop loss in pick would have been huge, right? So in this kind of setup, then that's where I was switching toward relatively lower time frame, maybe the 2 hour. On the MT4 you don't have the 2 hour, but if you did have the 2 hour on MT4, on trading view we have the 2 hour, right? And then it would somewhat give you what sort of an early entry criteria, right? Based on the same candlestick formation. That thing is even missing. I don't even know where the setup is anymore, because we're looking at it on the 1 hour. But yeah, I'm pretty sure what I was trying to explain is clear. So always make sure that you're not taking an entry that is extremely late and then allows you to risk huge amount of pips, right? How do you get which pips calculator? This thing right here, this thing here is just it's a software. I can send it to you though if you message me. You said your third task setup, okay, at least every week. It happens when the market wants it to happen. I don't know if it happens every week or whatever it is. It happens randomly. Once I mark up my chart, then I'll be in anticipation, right? So it's not like I have a specific week or day or whatever it is. So up to this point, any question? We've come to the very end of this. You should ask your final questions, everything you need to know so far, right? Last week, like I said, if for anybody who's on the group, I said that we do mess with some moves because I was moving about a bit trying to do other stuffs. But indeed, you can see here we have this kind of evening star formation, which would have been was the week opened. We're trading just in this range, and eventually we closed with what this nice evening star formation, which was a strong, which established a strong bearish presence. If you had our entry here for a short, what would have happened? There was a nice push on the downside, right? Any question? Someone said, can you please touch on it? That's too much of this thing. I'm not sure I can do that for you at the moment. That 1,000 is too much talking. I've done a lot of talking already. I'm extremely exhausted. I'll send you guys a link anyway to plot it. I'll send it right away. What of lower time frame? I don't do lower time frame entries. I only take my entries on the 4 hour though. But I'm saying whatever time frame you're looking at, if you're swing trading, then you want to be looking at higher time frame, which is predominantly your least time frame should be the 2 hour time frame. You can get a 2 hour trading view though. I don't even take entries on the 1 hour, right? Because I'm looking at weekly swings. And I've taught you how to identify those weekly swings. So if you're learning from me, you're learning swing and not day trading or scalping or whatever it is, right? Is this software for period separation? It's not a software though, it's just a settings in the MT4, right? Just right click, come to properties, and then once you come to common. Once you come to common, you're going to see what show period separator, right? So if I untick it, the whole period separator is going to get missing. Look at this. You see that the period separators is missing. Now you can't even know where the week will begin from or where the week will end. But the moment I right click and then I come to common and say show period separator, and it's back there, right? So it guides me to know how the market is trading within a particular set of week, right? Very helpful. Very helpful. Stream priority, right? It can change a lot in your life and in your trading career and in your journey if you give it so much priority. It's extremely helpful, right? If you take keen interest in it, in confluence with candlestick patterns, right? In confluence with candlestick patterns, you start seeing marvelous results in your trade, right? You can hear start rejecting here, Investama, sort of an Investama, sort of a doji. Right from that point, boom, a sharpward push on the upside. Right, how much pips is that? About 80 pips, quick 80 pips, right? Very quick 80 pips. So yeah, take note of all these, right? Try to appreciate this, but test it enough. You see this one here? This was equal highs, and I had this setup though, right? Resistance, ran back into the resistance, started rejecting here. And before this thing would have decided to even run all the way down here, right? On the lower time frame, you would have what? Lower time frame, I mean 2 hours. That quick entry here before that thing will just drop. Now is how do you install a currency strength meter? Go on YouTube. There's so much information, free information on YouTube to help you do all those tasks. There are not any hidden things, right? But it's free on YouTube. Oh, it says my eyes are opened. No, I don't wait for retest. I don't trade break and retest, right? I don't trade any break and retest. So if the market is choppy, you see it from their weekly range, right? So that's why the whole of last week it was very difficult for me to find entry. Look at this up, down, up, down. So not, right? So they inform you, right? If the market is extremely not favorable, you start seeing it from the weekly perspective, from the 4 hour, right? Look at this. How can you possibly find trade here as a swing trader, right? Extremely choppy. Then you start seeing things differently. So the market wasn't like in that favorable position at all last week. At all. Right? It was just going up, down, up, down. You can see here that this particular week we had some nice swings, right? Right after this sort of teaser top, a huge drop on the downside. But here we have what after maybe probably this early hours of the week, and subsequently we're just up down like that, right? Very choppy condition, not favorable for finding an entry in the market. Oh, Tommy says what he took his first beginner lesson from me in 2018. Is it Thomas? Is Tommy Thomas? Is Tommy the same as Thomas? Thomas, who took the beginner session in was it Brex, former Brex office in East Legon. If you're the one, then I remember you anyway. It's a great experience you have on the market. I've watched countless videos on YouTube and pay traders to learn, but none has touched deeply on trend lines. You look at it, great insight, great job. I don't know if yes, I remember you, Thomas. All the way from 2018. That's impressive. I hope this one improves your insight and then gives you extreme knowledge to do even greater things, right? Will you do physical training? Hopefully when Corona dies down and yeah, some plans are able to come in play, then we may consider doing in-person training sessions and stuff like that. But at the moment, um, nothing like that arranged yet, but hopefully very soon. Yeah, you can send your chart analysis. I mean, people do send them, and then I tell them my opinion. Yeah, somebody says this has taken their trading to a next level. Indeed, indeed, it will teach you patience. It will teach you the right entry. It will also teach you how to apply these concepts and principles effectively, especially the trend line, unlike the way it is spelled out on YouTube or any textbook. Teach you how to use Fibonacci not as an entry but also as a basis of what jumping on a position psychological level, also not as solely um, decision to take a trade but also acting in as what a confluence to make a decision, and then finally reading into candlestick reversals, right, to give us that edge to want to take a position based on the kind of thing that is happening in our zone or area of interest. And also a little bit of trick by looking at what the raw MT4 chart and see how the market is playing out on the weekly, on the 4 hour in terms of weekly perspective, to also make informed decisions, right? It's pretty easy. If you find a setup here for a short, right, regardless of whatever is happening, because you are looking at it from this point of view, it's very easy to hold the trade. Unlike you, extremely easy, right? Last week I missed this trade, right? I was looking at it very choppy within the week, very choppy. I was just looking for one price action, one just clear price action to give me a confluence for a trade. And indeed, I had what these tweezers here, right? This is a tweezer top. Right off this tweezer top, what happened? Straight into what? Profit. No drawdown. Huge pips, right? About 90. If like up to this point that was 90, but if you held it through this gyration, and that's about 120 pips. But yeah, very great trade setup, right? But it all played in confluence with the technical analysis from the higher time frame. Is it in summary, if price runs into, is it straight into deep blues exactly? So do I have a group where I have all those who have taken my sniper entry course? No, not yet. But I have a private group where extremely good traders are invited into. Few people are there at the moment, but very soon I'm going to put together all the people that I've trained right into one group. I'm planning on doing that pretty soon, but I haven't done that yet. Will you add us to your private group? I'd add people that show me extreme skills, not in analysis, but in execution and then holding, right? Because it is not um, a take group. It is a give and take group. So you can't just be there and not be a contributor but a feeder, right? So it's just only few people that are there who post analysis, their trade setup, their result, the stuff, and then we have just few. They're not even up to. They're not more. Just some few people in there. But yeah, you always have access to me. We chat, whatever it is. But the more we have that continuous communication, then you're impressing me, and then my people with um, great insight from what you've learned, right? Because obviously the whole idea is that a group of people speaking the same language. So if you're there and then you're still doing something old, maybe you don't, maybe whatever we taught here didn't make sense to you. Of course, it's not everything that makes sense to everybody, just as humans as we are. But you just want to just feel like a part of the group. You would be a nuisance to the group. But if you understand the language and then you are in there, whatever we're doing, we do it with what oneness, and then we understand what we're doing. So yeah, that is a privileged group anyway. It's not a random group, but like I said, you still have access to me. You send me your setup, you send me whatever you're looking at. I'll be glad to give you my opinion in how I think about it. Telegram, Instagram, I'm always active. I'm not even active on WhatsApp as I am on Telegram and Instagram. You ignore messages sometimes because there's dozens of messages that comes in. You have no idea, right? There's dozens. I wish I could show you, but there's thousands of messages that come in from a lot. So sometimes, I mean, I can't spend the whole day just on Telegram replying, but the moment there's the slightest bit of time, myself and my sister who helps me to reply messages, we do well to respond to everybody. Will we get signals to trade? Yes, you will. How your 1 million members you're training? It's all in fashion, right? I'm waiting for something. Once that thing drops, right, then there's more to do, right? So it's not just by word, but there's action backed. But it's all for another topic for discussion. But yeah, I'm just waiting for something at the moment. Once that thing works out, we start seeing results. Yep. It's we've spent far more time. We've come to the end of this session. From this session, I expect that your knowledge is extremely improved. I expect that if you didn't have any prior, a little about risk management. Well, I'm extremely exhausted, but I'll try my best to do that. So I always see it something when I come on my Instagram live. I talk about how you can make money on the market. I said either you come in what small and then you're going in what big, or you're coming in big and then you're going in small. These are the two formulas to what make money on the market. How do I mean? So with someone coming in small, I'm talking about somebody who's coming in with an account balance of let's say $100 to let's say even $1,000. And then for somebody that's coming in big, let's say I'm talking about somebody who's coming with let's say $10,000 to even let's say even a $50K, right? Two of them are risking 1% each. If this person risks 1%, then they are risking what? $10. Is it $10? 1% of $100, is it $10? It's $1, I think. It's $1, not $10. It's $1. And then the $1,000, 1%, he's going to be risking what? $10, right? With a 10K risking 1%, the person is risking what? $100. And then with a 50K, the person is risking what? $500, right? Now you say you want to make money from trading, and KOJO is sending trades to you, whatever it is, and then he's emphasizing that would use proper risk management, don't risk more than 1% of your account, blah blah blah. I'm always preaching. And you know that you have what, just $100 or in your account or something. If you're following my 1%, it means that you're going to be making profit of what, $1, $2, $3, $5. It may not be enough to be sufficient for your expenses or the kind of things you wish to achieve from trading, right? So you're wondering, this $1, $2 profit, when am I going to make money to even buy a laptop for myself, or when am I going to even make money to buy a new phone for myself, or whatever it is, right? But the same person who also has a $10,000 is taking 1%, but if they are making profit, they are making it in 1% multiplication of 100. So $100, $200, $300. And $100, they can what, get good amount of things for themselves. $200, you can get good amount of things for themselves. $300, yeah, they can take care of some petty stuff, right? Not even petty, relevant stuff with income from 100 to and still by what, that 1%. So here you're coming in what, small. So to make money, they need to be what, going in what, big. You can be risking that 1%, 2%. You obviously need to be risking what, 10%, 20, 30%. But what will make you risk that 10%, 20, 30% when you don't know what you're doing in the market? You obviously blow your account. So you need to, here, before you want to tread on this route, you need to do what? Have an edge. And how can you develop the edge? Which is the skill set we've learned here, where you learn about the lower high, lower low formation, theta to the trend line, candlestick pattern, reversal formation, confirmations, and everything. So once you're confident with this, you wait, your setup builds up, you can capitalize on a single move by what, taking or like risking maybe 10%, 20% on that $100 to see how it goes. Capitalizing fully on that move. Before you realize $100, now you have what, a $300 or $400. You went in big, and then you went in big on a small account, and you made relatively good amount of profit. But if you're risking that same way on your 10K, which is already big, but you're now going in with that 10%, 20% risk. Obviously, if you lose 10% of this, you've lost 1,000. If you lose 20%, you've lost 2,000. It's going to be a huge drawdown on you. So coming in big, then if you're maintaining the small 1%, 2%, you're still going to be relatively making what, good amount of profit, like $200,000, $500,000, which can take care of so many things, right? Comparing the same 50K, making that $500, $600,000, 2,000, whatever it is, continuously, okay. So obviously, what is two perspective, right? This is everything that has to do with what, coming in small and then going in big, or coming in big and then going in what, small, right? So with respect to this, then if it comes to risk management in Forex, this is how you have to do. For now, if you're scared about risking huge on your $100, then focus on proper risk management, focus on the skill set, and then once you're able to impress somebody with your skills, they can afford to hand over their 10,000 to you that, hey, manage this account for me, or do, or you may have some family members who may want to invest in you, one or the other. Those opportunities will come if you're able to improve your skills. But if you don't have anybody who's going to trust in you, give you their money to trade for them, blah, 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 but you can be able to come up with your $100, $200, perfect your skills, go in hard, grow your account, do whatever you want to do with it. That is what I can talk about when it comes to what risk management. What again? A friend of mine said you start with 20 Ghana cedis. Yeah, you can start whatever you want to do. When is the right time to analyze the market? Any time at all is right to analyze the market. There isn't any time like a right time to analyze the market or a wrong time to analyze the market. You can analyze the market at any time at all. But obviously, quiet times allows you to have a good perspective of the market. And quiet times usually are what Sunday evenings around this time, and then Asian sessions. In the Asian sessions, it's usually what GMT from 12, 1, 2, 3, all the way to 5. The market is usually very quiet, so that way you can have what calmliness in the market. But from London session, there's too much volatility, and then you're trying to do analysis in those times. Um, you may be led astray or you may be misled. Recommended broker. I have what IC Market XNS as my recommended broker. So I send links on them. You're free to join any one of them. But I use both IC Market and then XNS. What's GC? Is it GBP Canadian dollar? Somebody says I should play. Somebody says they love XNS. Yes, I love XNS as well. Easy withdrawal. So pound Canadian dollar, indeed, I was looking for a short. If I was home on Friday, would have got a shot on it, but I was out, right? I was out, but I had my eyes on that, right? Especially when the Canadian, we had a fundamental coming. I don't know if it was interest rate or something like that. That pushed this thing right from here. Was it interest rate or unemployment rate? Probably unemployment. Or was it interest rate? I think interest rate on Thursday, right? If you check the calendar on Thursday, right, or back test 1, 2, when is that? 2, let's back test on Thursday, we'll see. Yeah. It wasn't Thursday. Okay, yeah, it was Wednesday instead. So Wednesday, you can see that Canadian overnight rate statement here 0.25, 0.25, 0.25, nothing changed, right? But that was a catalyst that moved pound card. That was a catalyst that moved pound card with this spike here. So once it moved this spike here, then I knew what we were coming to. So 0.1 is up there, 0.2 here, and I have 0.3 here. So I tell you that sometimes the market can come very close to 0.3, but I won't tap into it. But subsequently, then push. Remember when we're doing that thing, like I told you, that's what I said. I would always want to wait when we come very close to the third touch, indeed, for us to touch it, rather than say, oh, we came close to it, so let me start shorting. This is a perfect scenario of what I was trying to explain to you, right? Who remembers that I mentioned that? Who remembers that I mentioned that? Right? Let me know if you clearly remember that. Yeah, said I told you that sometimes the market can come close to it, so you say, oh, it has come close, so let me start taking a trade. But eventually you take the trade, it comes down and then it pushes back up to tap on it actually again. Yeah, so this is a clear scenario like that. So yeah, once that fundamental came in, I expected us to now fulfill that third touch, and then indeed we did, right? And then you can clearly observe what the rejections that were going on in that range, right? And then if you read into price action that we just learned about, you can see what evening star formation even in the middle here. You see that evening star formation though. 1, 2, 3 here. We have what sort of a bearish candle that pushes up, then the shooting star long wick, and subsequently what a huge drop. Right, it's about 80 to 90 pips drop. It's a very tricky entry if you don't have experience. It's very difficult for you to find entry in this kind of trade setup. So I know because your wicks may easily wipe you out before the trade comes into your direction, right? I know. As time goes on, you guys will start seeing the light for yourself. But yeah, basically that would have been the confluence for this trade. So currently, as we just pushed up, it will just be prudent enough to relax and then just see how the market would create space for this one and then see where we go from here. If we're going to still be choppy or we're going to drip and come all the way down. Remember again that over the weekend, Boris Johnson has announced that the UK is going to go on another 4 weeks of lockdown. So obviously, it could bring a huge negative sentiment on the pound, and the pound could literally sell off, right? So yeah, that's also one thing you should factor in when you're looking at the pound pairs. I think that is it. Guys, I'm extremely exhausted. Thanks for your cooperation, and yeah, I believe this made much impact in your life. Like I said, practice, 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 and then you'll be perfect. Hopefully, we'll catch up again sometime soon. Thanks for joining this session. Right. Somebody says, last time you sent a signal and we all jumped into trading and started making huge profit. Then all of a sudden it pulled back and we started losing. But you still gave us hope. In order to go up, we must come down. In order to go down, we must go up. How did you know that? Okay, I talked about that yesterday, but I'm going to emphasize that I said that was the main reason why we took a loss on USD JPY and then Euro JPY on Friday. Was it Friday or Thursday like that? Right. But like I said, nothing is perfect. Not everything is going to play out, just like it didn't play out on Thursday, but sometimes it does play out a lot. So yeah, that trade we took that I said, in order to go up, we must come down. They were the pound pairs, right? So if we look at, let me see if I can remember them. Um, was it? I think it was this one here, right? I was just looking at it here. We took our entry somewhere around here. The market pushed up. We made a huge profit. Then quickly there was a sudden spike here, which put a lot of people in drawdown. So obviously we've established what that bearish presence already. So it's not this pullback that will change the trend. So I was confident that this is just a pullback for a further push down, a pullback for a further push down, a pullback for a further push down, a pullback. So basically that stands from I was saying what in order to go down, we must come up first. Do you get it? So if you didn't get that, I think this picture paints a perfect picture. So yeah, that was the reason. So I just knew that we were going to come down. So the entry was here, the push was down, it pushed back up against us, put a lot of people in drawdown, and then what happened? It had to push down, push back up against people. So if you pick your entry here for a sell, then obviously you're going to suffer massive drawdown. If you don't have the heart to hold it, you close it, then you come back, you just come and see that you're here. That's why I always like to pick my entry at the top of the range so that even when there's a pullback, it doesn't put me so much in intense drawdown before that push down. Right. So yeah, that should give you some picture as to what I was saying. In order to go up, you must come down. In order to go down, you must come up. Right. But the same concept was applied here by the field, which is here in the EUR/JPY scenario. So I was actually targeting this range to hold strongly as a support, right? My eyes was here for a long time. And then, yeah, indeed, like I said, I took this setup for a long, right? And then my entry was somewhere here. I had made about 20 pips already. So with this push on the downside, I just basically thought it's going to be that pullback for a push up, but indeed it just smashed me, took me out. And then, yeah, it continued trading now. Personally, I didn't think that, but I'm just saying it in that group sense, right? And then it continued all the way down. So, yeah, it didn't play out, but for the most part, it does play out, right? Like, let's say you went for a short here, quick enough, it came down, it pushed up against you. I'm not going to get scared for this pullback, knowing that it's very often for the market to just pull up, pull back, and then continue down or something like that, right? So with experience, you get used to that move, right? With experience, with continuous practice, you get used to that up down thing that the market does. I don't use hot forex, so I can't say anything about it. You see, we still made huge profit though, and that's what I even used to pay for this 9.20. That's incredible. I'll send a link pretty soon. All right, so we end here. Thanks for joining, and I hope you learned a lot and practice, and then you'll be perfect. I'll see you guys some other time.